Hello, and thank you for listening. My name is Luke Mardigian, and you are listening to Be Insured, where we talk about business, leadership, and insurance. That way, on your worst day, when you need it the most, you will be insured. Now, owning a business can be an expensive proposition. You're buying fleet cars and buying new cars for yourself because you're driving all the time. You're buying new computer equipment. You're spending a ton of money each month on consistent bills. Well, how can you get those bills, have them be presented in a way that saves you income on your taxes? That's our topic today. How business owners can lower their taxable income. And I'm excited to be joined by my co-host,
Eric Stephen Gestring with the Mardigian Agency.
And an amazing lineup of experts.
Amy Geer from Hoerner and Geer CPAs.
Carlos Vera with Farm Bureau Insurance.
So, Amy, I would love to hear those expenses I just listed. Can you write any of those off?
Of course. So the caveat to everything is always, it depends.
Yes. I get that answer all
right.
the time.
I'm gonna try to move forward without saying it depends before everything that we talk about here. But generally, most everything can be written off. There are definitely special rules when it comes to vehicles, and it definitely depends on the type of vehicle and the size of your company. But let's start with, yes, we want to spend money on those things because we can write them off and it will help in the long run if it will benefit your business.
Right. So yeah, the concept, I think most business owners get this, but sometimes, it took me I was a little slow on the uptake on this one. You have a choice. Either you cannot spend that money, and depending on how your business is set up as a sole proprietor, S Corp or C Corp, the money somehow comes to you as an owner as taxable income, right?
Correct.
So you have two choices when in your business. Income comes in, you can either spend it on expenses for the business, or you cannot spend it and you're going to pay taxes on it.
Yes.
And so you kind of
Nobody wants that.
Right. You kind of have, but we want money though, right? So it's like there's a balance act to that of deciding when you're supposed to invest money in it. And that's kind of the tactical approach of any business owner, of just constantly evaluating those decisions. How, as a CPA, how often do your clients get you involved in that decision-making process?
For my clients, we generally want to have a quarterly meeting at a minimum, because a quarterly is good because, one, a lot of businesses are seasonal or have cycles, and two, estimates. If you are a small business and you have to pay tax estimates, or you're a W-2 employee and you just have a large amount of income you want to keep track of and other things going on personally, a quarterly time frame is a really good time to sit down and just reconvene on where you're at for the year. And then have that discussion. What do we want to spend money on? Is there anything to spend money on? To spend money just to get cash flow out the door is sometimes meaningless. Sometimes you just want to pay the tax and call it good. But if, for instance, your car is rolling down the street and the bottom falls out of it, maybe I'm going to recommend that you get a new car, and then we can talk about leasing versus buying. And cash is king. So a lot of it has to do with how much cash is on hand to make those types of purchases. And like I said, that's good to do on a quarterly basis just to see where you're at.
Yeah. So you talked about leasing versus buying. Now, Eric and I have had these conversations offline too, because he leases right now. I bought my truck. And then you and I have had conversation of, okay, the truck's now about to be 3 years old. We've kind of taken as much of a tax write-off on it. The big chunk of the tax write-off has already occurred in the past few years. Should we look at something new? So, what are the advantages of buying a car as far as taxes go?
Yep. So Eric, he is getting the advantage of every dollar he gets to write it off. Assuming it's 100% business use, he's writing off every dollar for his business purpose. That's a great. Every dollar spent, he gets a tax, write-off for, let's say, 30%. Whereas like you indicated, when you buy a car, there's depreciation. You have to keep track of then paying for gas, paying for maintenance. So there's a little more record keeping also with it. And you can't always necessarily write off every dollar right in the beginning. So there's a lot of nuances to vehicle write-offs that the IRS has in the code. And a lot of it has to do with personal use. But there's ways to monitor that and capture that. A lot of technology is good for that. Like there's apps that will track your business mileage versus your personal mileage.
Mile IQ is what I use.
Yep. And I use Mile IQ too. So
it's just easy.
And we're not getting paid for this.
No, we're not. So.
Yeah.
No, and
but
I
if they want to
did-
sponsor us, that'd be great.
Yeah. Free apps for everyone.
Yeah, and I mean, obviously they have competitors that will keep track, but that is a consideration, is how much you use for personal, how
Doesn't
much you use it.
QuickBooks even do it now?
Yep, and QuickBooks has their like self-employment version that helps keep
Yep.
track. But again, like there's a whole bunch of them, but it's a consideration for how much you use personal versus business. So that would be my question to Luke would be, okay, how much are you using this for business? How much is personal? How much are you going to use it going forward? Is there a better option? And then going back to that cash flow, do you have the cash to just go buy a vehicle outright or to go put a big down payment on a vehicle? Interest rates are very important when it comes to that. Like you are probably not necessarily concerned about interest rates, Eric, because you're leasing a car, same payment every month. It works really good in a budget.
Yep.
When you are buying a vehicle, you might have to outlay $5,000, $10,000. That might not be a part of the budget for a small business owner. So leasing might just work better if you don't have to have a down payment. So
And
it's all
with leasing, you're not paying for maintenance. That's
Yeah.
another good
and
benefit.
it's usually under the warranty for that period of time. And you guys are talking about your personal vehicles too. Well, there's other considerations for if you have employees who are using those vehicles. Do you want to buy them a brand spanking new 2019 Yukon Denali to drive around?
probably
So
not.
it's something
Luke,
you
can
might
you give me one?
You got to sell a lot more.
So when you have to worry about warranty and maintenance and who's actually driving the vehicle and what its purpose is, all of those factor into whether I would recommend, like what type of vehicle and what type of write-off I would recommend. But in the end, cash flow is important, and getting that write-off and properly recording it. So when it does come to tax time and you're the lucky 1% that gets audited, that we can support that on the back end.
Yeah, well, that's when I purchased my truck, I think it was like sticker price was like $57,000, and year one we somehow were able to write off like $16,000 or $17,000 of
Yeah,
that
you get
purchase.
a good chunk right off the top.
Because it depreciates the most in the first year, right? You
Yep.
drive it off a lot and bam, the value drops. So, I probably put a total of $8,000 into it cash, but I was able to get $16,000 of write-off to offset that. So it didn't really
Right.
cost me $8,000. It cost me a percentage of that.
Right.
And I know it's not as simple as just saying,
No, but you're talking about it's called a luxury vehicle.
Okay.
So there is like a tiered schedule for how much you can
Okay.
write off for that. And then you have personal use versus business use also. So on the back end now, we're talking because you are outlaying this payment for it and you might not be getting the full benefit
Right.
of that. So then we talk about, okay, maybe let's switch gears and do a lease, or switch gears and get a different vehicle before yours does start to take a dive and you have more maintenance costs and things like that.
Yep.
Not that you can't write off repairs and maintenance costs, but I'm sure you could use that money for other things.
well, and the headache of having to take
Right.
it in and not have your vehicle
Right.
and all
For
that stuff.
the
yeah.
small business owner, time is money.
Yep.
And I am also that's a huge factor to me. I do not have time to go sit at the dealership for 3 hours waiting for them to like fix the side of my door because it's falling off or
Right,
something
yeah.
like that. And even though it's a little thing, and even though it would be a write-off, I just don't have time to deal with that.
Yeah, because you're losing more per hour
Exactly.
not being out meeting with clients
Right.
and doing your work.
Right. That time is chargeable somewhere along the
Yeah,
way.
billable to someone, right? What I found interesting, so I ran the numbers. I was going to try to downsize to a pickup truck and get a lease, and it ended up being like $100 difference. And so even with the tax savings, it was pretty close to a wash considering my truck's going to have a pretty good value at the end. So, if that made me think about people who have fleet cars, like, how, is there a big, so you talked about employees using it, not wanting to buy a new car, but is there an advantage at some point? Like, if you have 10 cars in your fleet or 10 vans or 10 trucks or whatever, now after 5 years or however long your loan is, you now have those assets on the books. So your business is worth a little more. So is there an advantage one way or the other? And how do you typically see your clients handle that situation?
Yeah, it's different and it's obviously a per client basis because if you do have 10 vehicles on the books, it depends again on the purpose. If you are a construction person and you have control over all of these different vehicles, that's a piece of it, is having the control over these vehicles. You end up with these assets. And again, it goes back to cash flow. Do you have like a rotating 5 years where every year you're mixing out 2 of these vehicles so that you don't have to worry about repairs and maintenance costs? And are you having to worry about people taking these vehicles home at night where you have to then have administrative time for personal use of the vehicles, and just switch, and then doing that switch out year over year, keeping track of that. Having a fleet definitely adds to the complication of it, so it has to be worthwhile to outlay that cash for all those different moving pieces.
Yeah, I worked for a Fortune 500 company for 5 years and had a company car during that time. And every week I had to go in and put my beginning and ending mileage, every receipt. I had to scan every receipt for gas and oil changes up into it. And I was just one person in a company of 8,000 people. And I don't know how many have fleet cars, but probably 1,000 or 2,000. And I could imagine that the bookkeeping on that just starts getting crazy.
It does. And a lot of times that can be offset by the fact that when you go to a dealership or you go to GM or you go to Ford and say, hey, I want to buy 8,000 vehicles from you. I mean, that's probably a high number.
Yeah.
But that's different from taking small business owner X versus business owner who has to buy 25 vehicles a year. They're probably getting a deal that helps offset, some of that administrative cost. Right. So it does make it better. And again, it all goes back to cash flow, being able to write those things off. But there's so many other beyond tax flow considerations that go into having a fleet or just having a vehicle with work and personal use.
Yeah. It's definitely an individualized thing. I know if there's one thing that I wanted to give as a pro tip, I give this to a lot of small business owners, is if you have an LLC, an S Corp, C Corp, if you own a business, you're eligible for what's called a business auto insurance policy. You don't have to get it. You can put it on your personal auto if you want to. Most of the time, every company is a little different. But the advantage of a business auto is it's in your business's name. It is clearly, unquestionably a business expense that is being paid directly out of the business. And I think that's a huge advantage over just kind of trying to, especially if it's you and your wife and 4 kids and they each have cars, and now you got to go to your policy and break out your car, cost of your insurance on your car specifically, and get it. It just saves all that bookkeeping to where you can just insure your vehicle on a business auto policy. And that's a nice pro tip for everybody.
Yeah. And you do bring up a good point when you do have that personal breaking it out. My suggestion is, one, obviously you need to be talking to a tax professional to make sure they know you have that situation and to garner the best situation for you. But 2, to make sure that at the end of the year, my opinion, I like to see that being spent through the books, even though you have some personal businesses, so that I can properly capture the personal side, if there is personal side at all. Or we at least have that discussion. So like you said, you write it off through the books, it's under the business. That's awesome, because then your professional, the people who are mentoring you and helping you through that process to make that decision can see that. It's not just we get to the end of the year and you're like, oh yeah, by the way, I have a car and I use it for business. Yeah. Like that, I can't do anything with that after the end of the year.
Yeah. It's like, okay, that's a lot. And now you got to track stuff down.
Right. Then you have to go back and track it. So as Luke suggested, put it through the books per se.
Yes.
So can we agree that leasing might almost always be a better option for a business owner?
What? No way.
All right. So how does buying or leasing affect business owners, and from your standpoint as an accountant?
So from my standpoint, like I alluded to, a lot of it has to do with what cash can be outlaid to purchase a vehicle out front, what the interest rates are. There was a time where interest rates were 8 or 9%, and buying a vehicle isn't maybe something that I would recommend, just because then you're outlaying so much on the interest portion of it, and you're not getting the benefit of actually paying down the principal on that or building up that equity like Luke mentioned. But right now it can go either way. It just depends on the use. Also, there are a lot of people who do not drive 12,000 miles a year or whatever the normal lease mileage.
Yeah.
Not that you can't bump them up.
Chevy's 10 grand.
But it's right. It can be ridiculously low. And there, as a business owner, generally you're driving more
over
than that.
Yep.
Right. I mean, that's why you have a vehicle.
So one thing I've noticed, and big reason why I went towards the lease, I'm just going to share this publicly, is that bottom line, you save almost $10,000 on most leases if you lease to own it. So you're actually saving a huge chunk of money. Plus, managing that as a business owner is much easier, in my opinion.
Yeah, but you have to get that buyout amount. Yeah. That's what I
you can get that up front. And a lot of people don't.
I considered with that Silverado I was going to get, I considered buying it out at the end. And when he gave me the value, I paid like 2.5 times the depreciation in my lease payment. I'm like, well, that doesn't make any sense. Why would I pay 30 grand to have the value in the vehicle drop 15? This doesn't make any sense. So you got to really weigh all that stuff out.
When you get on the back end, is it going to be worth what you're buying it out for? Would be one of my big considerations. Because if I have that asset on your books, And just thinking if we have to get rid of it quickly or if something does happen and we want to get rid of it, that's a big consideration. So there are different lease options. There are different buy options. You might not have to put any money down. That could be really great timing for a small business. But it just depends also on what the options are within each of those. Or what vehicle. Now, I don't know if every vehicle can be leased, but maybe you need a vehicle and you have to retrofit it. Well, that could totally negate a lease situation.
Nope.
And you have to buy the vehicle.
Thank you so much, everyone, for listening. Make sure to follow us at the Mardigian Agency on Facebook and Instagram, and we'll see you next time on Be Insured.